Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
The rest of my favorite reports of the month are out this week since they didn't all line up last week. We'll get to those. We'll talk cold storage. We'll talk livestock slaughter coming up in a little bit. But to kick things off, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, we saw those live fed cattle up $3.40 this week. We also saw stronger feeder cattle prices anywhere from $3 to $8 higher in those markets this week. On the future side, the June live cattle futures contract was up nearly $1.40. The August feeder cattle contract, however, was down $1.20. You know, we did see July corn up nearly 49 cents this week. I think that moved those feeder cattle prices lower. Choice box beef price was up $1.55 this week. On the hog side, cash barrels and gilts were basically unchanged here on the week. We saw the June lean hog futures contract down $6.90. We also lost a little more than $1 on the pork cutout value this week on what was weaker hams and bellies.
It has been a very interesting and inconsistent ride the last couple of months in the hog market. We've seen, I'm assuming the supply situation kind of allows processors to be in control. As we look at what's been happening, do we get concerned about demand creeping in or demand concerns creeping into what's going on? How's that kind of all playing out?
Yeah, so I think for sure when you look at things like consumer income and available dollars to be spent on food, it's as those have, I think, dwindled as we've looked here at 2023. It's been hardest on the pork market. My thought is as we get in the second half here of 2023, perhaps we get in a little better demand situation than we've seen thus far. Maybe that helps us a little bit on pork prices, but you know, you're correct in terms of supplies of pork seem to be plentiful relative to the demand situation that we have in place today. And if that continues for the remainder of this year, it's going to get tough. You know, we've got a lot of producers who probably seeing returns that we haven't seen for a couple of decades at this point, unfortunately. So it's certainly a tough ride, and maybe the only silver lining here is that we'll get some cheaper feed costs if we can get a good corn crop continuing to grow here for the remainder of this year.
And I would assume too, Prop 12 maybe has a little play in what's going on the future side of things as well, not knowing exactly how that's going to impact the industry overall and the uncertainties that are kind of hanging in the balance there, because that comes into play here soon.
That's correct. You know, exactly how that's going to be implemented, I think remains a little unclear, but we know that we're going to add costs here to the situation. And again, it's just been a tough ride of late. And unfortunately, I don't see a lot of upside on hog prices, but maybe we'll get a little bit of break on feed prices as we go. Although having said that, and we saw corn futures up pretty hard this week, we're a long ways from that crop in the bin right now.
And a long couple of months ahead of us for that growing season.
That is correct.
All right, let's take a look at weekly slaughter numbers. We're heading into a long holiday weekend. So I'm assuming we're going to be down on both cattle and hogs for a couple of weeks as we take some time off on Monday and maybe a little bit of a break on Saturday as well.
And hopefully fire up some grilling here as we get in that Memorial Day weekend. But slaughter numbers for the week ending May 27th, cattle 625,000 head of cattle. That's actually 17,000 head below a week ago and 16,000 head below where we were a year ago. Also on the hog side, a lighter run this week, 2.371. According to USDA, that's 26,000 head below where we were a week ago, but 25,000 head above where we were a year ago.
When we take a look at percentage year to date, how are we seeing things kind of stack up to where we were a year ago?
So we are continuing to see cattle slaughter down. So year to date down 3.2%. Hog slaughter, on the other hand, up 1.4%, although we've been slowing a little bit that rate of growth. And as we talk about livestock slaughter, we'll see April was more friendly from a supply situation on the pork side of the equation.
Well, hopefully this summer grilling season has us ramp up the need to run some more cattle and hogs through the system.
Let's hope we get some stronger demand out there. That's for sure.
All right, cold storage first report out this week as we take a look at ending stocks. How are things looking, not only for compared to the previous month, but also looking how we were, just kind of how we're stacking up?
Yeah, so we are seeing stocks continue to generally move in the correct way for on the beef side, at least for producers. Stocks at the end of April of this year, 448 million pounds. That was 6% of where we were last month, or down 6%, I should say, of where we were last month, and roughly down 6% from where we were a year ago as well. So lower stocks continues to be the story here on the beef side. However, on the pork side of the equation, total pork ending stocks at the end of April here, 565 million pounds of pork. That's 6% higher than where we were last month, and roughly 6% higher than where we were a year ago as well. Your favorite belly stocks came in at 81 million pounds here at the end of April. That's 5% above where we were last month, but when you compare that to a year ago, still up 40% roughly relative to year ago levels of belly stocks.
So is that just kind of highlight still how drawn down those stocks were for some time?
Yeah, for sure. You know, we had 58 million pounds. That's last year at this time. That's kind of pretty low levels of belly stocks. So we're building back to where we were. I don't think we want to make too much out of 81 million pounds of belly stocks. That's still relatively tame relative to some longer term averages.
All right, as we take a look at the other report out this week, livestock slaughter numbers, let's talk a little bit about this beef production number.
Yeah, so when you look at overall beef production for April relative to a year ago, down 11%. We're beginning to see the effects of less total cattle slaughter. Total cattle slaughter for April was down 9.6%, fewer steers, fewer heifers, fewer beef cows. The only category that was up was dairy cows were up slightly. But that 9.6% decline is probably something we're going to see for a period of time going forward. On top of that, dressed weights that were 832 pounds last April are now sitting at 818 pounds. That's down 1.7. So the combination of less slaughter and lower weights gave us the 11% lower beef production. On the hog side, we also saw April pork production down 3.7% relative to a year ago. Weights there, barrel and gilt weights were down 2 pounds. Sorry, hog weights down 2 pounds. Total hog slaughter down 3.1%. So down in both beef and pork production for April of 2023.
We've been talking a lot about that beef cow slaughter number. When you look at this month, anything that stood out, or is it just continuing to tell the same story it's been telling?
Yeah, so I think it's continuing to tell that same story. You know, we can look a little bit at the federally inspected regions to get a little bit of sense of what's going on. When you look at Region 6, Arkansas, Louisiana, New Mexico, Oklahoma, Texas, we are down relative to 2022 in terms of beef cow slaughter in that January through April period. However, relative to where we were 2017 to 2019, up nearly 23%. So, you know, that tells me that the dry weather, especially in places like Oklahoma and Texas, are continuing to affect beef cow slaughter. You look at Region 7, that's got Kansas, Missouri, and Nebraska in it. up slightly year to date, actually, in terms of beef cow slaughter in Region 7, and up 26% relative to that 2017 to 2019 period. The other one that stuck out to me, so although Region 4, which is kind of the southeast part of the U.S., down slightly, or down, I shouldn't say slightly, down 7% relative to a year ago when we look at year-to-date numbers. They're up 52% relative to 2017 to 2019. So I guess I just don't see a lot has changed in terms of we're not going to be building the herd anytime too quickly.
And you mentioned the drought conditions. I'm assuming that's something we'll continue to watch to see how the drought monitor shapes up and maybe how that beef cow slaughter number looks in the months moving ahead as well.
Correct, Megan. So if you look at that drought monitor map today relative to where it was a year ago at this time, so there's a lot less drought. However, that drought still remains Kansas, well, especially western Kansas, south central Kansas, Oklahoma, into Texas. Nebraska equally continues to be dry. We've got a little finger chill still trying to stick its way into Missouri. I think there's still a number of places where cattle are abundant that we don't have enough rainfall relative to what's needed for pasture growth.
It's hopefully more rain it can make its way in, and the El Nino weather pattern where we get where we receive more precipitation, cooler temperatures, allows for some regrowth in not just the grass aspect of it, but hopefully the herd as well.
That's correct. And I think you hit the nail on the head. Timely rains matter here. If we get timely rains, I think we can continue to begin to see some interest in parts of the country of expanding. But if we don't get timely rain, it's going to get drier and it's going to be hard to have enough grass, especially given where hay prices have been of late, to get a lot of growth in terms of beef cow inventory.
Got anything else?
I think we've covered the waterfront this week.
Here is to the kickoff of the summer grilling season. Go buy some pork, go buy some beef, spend some time with your family and friends, and remember those who gave everything for our ability to do all the things that we can this weekend. And gosh, I sure hope the summer grilling season can provide us a boost in domestic demand on both the beef and pork side.
We can sure use some better news, especially on that pork side of the equation, just given how tough profitability has been these last few months.
Got next week's reports. What are we looking for?
Yes, we'll get a restaurant performance index next week, as well as a jobs report. So a little bit of demand news, and we'll also get from USDA their latest quarterly outlook on ag trade. So we'll see what they see in store in the coming quarters in terms of trade of U.S. ag products.
Scott, have a great weekend. We'll talk to you next Friday.
Sounds good, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for a wrap up of what happens every day in the markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.